Hello, everyone. I hope that you can all hear me. In that case, please, our team members, if you're there, if you're watching live, if you're watching from all over the globe, please put a like and let us know if you can see us. Welcome to yet another event that is hosted by Thrilled Labs, but also kindly organized and enabled by our wonderful speakers who are joining very, very soon. Our round. We are going to speak today about fundraising in 2026 and really what it takes to raise capital in our industry. We do a couple of events this summer, us at Thrilled Labs, a Dutch company. We're building Web3 networking and event solutions with a team and connections, and of course, partners from all over the world. What we're doing this summer is that we are hosting a couple of different events. Today, fundamentally, we're going to speak about fundraising and what is really needed to fundraise in today's 2026 industry. Now, whilst I'm talking, I'm just going to say out here that we have wonderful speakers waiting for us right here, and we're going to speak about how companies, how founders, how other professionals can really get their hands on that capital that we all need ultimately to grow in this increasingly concentrated, centralized, can we also even say, and increasingly selective market out there. Now, a couple of data points that I would actually like to address whilst I slowly put all the other different speakers as well on the stage. Welcome, everyone. Thank you for joining. Before I get to you, gentlemen, let me just put out here that why we're going to speak about fundraising today is because I think that the game has really changed for capital and for fundraising in our industry. What we basically see based on last minute data is that larger and later stage companies are getting more and more capital out there. What we see is that, of course, a large share of the capital is going to US-based startups and companies. AI is attracting so much capital out there, and generally AI is a bigger and bigger role, of course, in the whole fundraising process. And that's why we want to learn and speak with you. Very, very happy that you could all make it. We will speak once again about different questions. But first of all, enough from my side. What I would love to ask you, gentlemen, maybe I can start with you. Jacob, founder, I believe, and CEO at least of the Nordic Blockchain Association, as well as an investor yourself. Would you kindly introduce yourselves? Then we also move to our other fantastic speakers, Drew and Hassan. Please, Jacob, feel free to take the stage. Let's see if you are, yes, you are muted, please.
Thank you very much. And I'm really looking forward to the discussion with the other speakers here. A brief background about myself. Educated as an auditor, which meant I led into being CFO, head of finance. So I think the first 10 years of my career raised capital, 200-300 different times. That was back in the hyperscale days. So try to raise everything from 5-10K to 50 million plus 20, like 30-50 million dollars. That must be the largest amount. So tried it quite a lot as a founder or just as a CFO. Then turned into building and helping the ecosystem. So let's call it investment brokerage. So helped out raise capital own project, but for other companies as well. And then I turned VC. So from 19 to 22, 23, I was partner and head of due diligence at a venture capital firm investing into blockchain. We invested 45 different companies. So been a little bit around the block, both of trying to raise myself, help other one raised and be a VC. And now I'm not the founder. I'm just lucky to be part of the ecosystem here in the Nordic and now trying to build a really strong Nordic ecosystem. And I think the time is quite interesting. Let's put it in that matter. But I'll share more on that later.
Yes, that's great. Actually, that might be a great moment also to hear a little bit more about someone else who's based in that area. Hassan, would you like to take over? And thank you, Jacob, for joining us.
Yeah, absolutely. Thank you very much for having me. Look forward to the conversation with everybody. So I'm Hassan Surdiwala. I'm one of the co-founders and also the executive chairman of Penning Group based here in Copenhagen, Denmark. So I've spent a little over the past 10 years in the venture space, sort of founding a bunch of companies. I've helped more than 100 startups actually raise capital. Not exactly those same ticket sizes as Jacob, but it's been mostly pre-seed, seed, and scale up. I got involved in digital assets in early 2016 when the whole hype of Bitcoin was sort of like really taking over the mainstream market. And I got very curious about not only the asset itself, but also the underlying technology. Subsequently, I became one of the early members of Blockchain Center in Vilnius, where I started to advise early stage ICO projects and blockchain projects raise capital. And now my focus with Penning is to build regulated infrastructure and wealth management products and regulated rails to give the masses access to the digital asset space and build what we ultimately believe will become the future digital asset investment bank. So I've done sort of like one side raising capital for a bunch of companies. Now I'm doing it for ourselves. So I've also seen all the do's, don'ts of raising capital, the sort of what worked back in the days still is applicable today, and what did work doesn't work anymore. Yeah, it's an exciting time to be in the Web3, the digital asset space currently, especially here in Europe, post MiCA framework being implied, was it July 1st? So yeah, I'll touch on that later on.
Yes, fantastic. And indeed, it's a thrilling time. It's an exciting time. Drew, let's move over to you. We're going literally to the other side of the world. Drew, tuning in from Australia, welcome. Feel free to share a little bit more about what you're up to. Thank you.
Thanks, Alex, and it's great to join you and Jacob and Hassan. So I've had a diversified background. I spent a chunk of my career in financial markets, and a lot of that at Deutsche Bank in Europe. I had from the fund giving side as opposed to the fundraising side. I used to look after a program called DB Select, which Deutsche Bank allocated capital, and also I was involved in the Bridging the Gap program that Deutsche Bank runs. So we allocate a lot of capital. I moved back to Australia. I was working in traditional financial markets at National Australia Bank, running their markets division, and then got very deep into digital assets and set up. I figured one of the things we needed to do was to be Australia needed a stable coin, New Zealand needed a stable coin, before we managed to get into the tokenization of assets, that we needed a digital currency. So I have flipped from being a fund allocator when I was at Deutsche Bank, and now I'm running around as a startup operator, running around trying to raise money for in a startup. So I've seen both sides of it, and there's lots of lessons on both sides. I think one of the things that I wish someone had have told me earlier, when you raising money, you've got to kiss a lot of frogs before you get your prince. And I cannot, if there's one piece of advice for any startup guy looking for money, you are going to be kissing a lot of frogs.
Yes. I would almost add an asterisk as well, but let me not say that. I can definitely relate to that, and thank you for that introduction of yours. But that's part of the game, right? Just quickly noting again, Drew, we see your video lagging a little bit. There is no problem whatsoever. The most important thing is that we obtain the information and your learnings and thoughts. But yes, it remains out there a little bit. Now, what I would love to do then, gentlemen, and once again, if anyone is watching right now, feel free to kind of like drop me directly your questions or comments as well on the live stream. What I would love to ask you first is, you know, you have been all in the space since quite some time, right? And we see that certain narratives or fundraising strategies might work, you know, not even in the last place if we think about token deals and etc. But more broadly, like, what do you think that are, let's say, fundraising narratives that really don't work anymore, or strategies, if you prefer to speak about that? Let's say now compared to a couple of years ago, like what really doesn't work in your opinion right now anymore? Maybe I can ask Jacob, you first. Feel free to tell us what you think doesn't work.
I think BS. I mean, I wouldn't, like, everyone know that it's not a good, there's not a lot of capital being deployed, like the VCs and larger deployers are lacking capital due to the market, but that doesn't need to be a negative thing. So I think that the most obvious thing is, say, like the happy, crazy, insane days where you could raise capital just because you were doing X for Y, they're over. And I would say luckily. So I think for me, it's fundraising is just part of running your business. I mean, you need to grow a business. If you're in a tech industry, you obviously need to have resources to build out capacity, right? So for me, it's not saying fundraising is, of course, it is a vertical, but it should be an integrated part of what you're doing. Like, to give you an example, what we're doing here in NBA, we have around 60 plus members. We work really community driven. We have steering committees. So our members are working to solve something. You're trying to solve something because that's why you're here. Like, you have a solution because you want to solve something. And if you're really fighting to solve that issue, then indirectly you're going to talk to the relevant people. You're going to talk to potential customers, potential partners, potential people you're going to recruit, and obviously potential investors as well. So for me, it's, of course, there's still a fundraising strategy, but for me, it's due diligence, it's material, right? But it's more focusing what you're actually trying to solve and be vocal about it, because then the right people is going to find you. Like, it's a technology space, so people that's eager about solving this or see it as an interesting vertical, they're going to be looking out for people trying to really solve it. So I think forget all the 21, 22 hype cycles where you just did something fancy. It was just blockchain for something. And now, like, look at AI. Like, AI have solutions for everything, right? Like, a lot of it is not gonna pan out. So I think for me, it's just going back to building what you really want to do, but just try to be more vocal and more engaged about it, right? So I think for me as a CFO, I'm introvert as nature. Like, I like Excel sheet. So I think, again, what would have done differently is being more vocal about what I actually want to do, what I want to change. And if I fight for that in my day-to-day business, then the network is obviously going to be around that. So I think it's forget the BS, try to solve your problem, be really vocal about it, and that would make sure that people actually know you're out there.
Yeah, that makes total sense. Instead of me like repeating the entire question, and thank you, Jacob, so much for adding that. Hassan or Drew, do you feel to add something here? Yes, please go ahead.
Yeah, well, there's my phone going. Hold on. There you go. I'll just hold it like this. Yeah, absolutely. So I couldn't agree more with Jacob. The narrative has changed. It used to be hype cycles. It used to be million X whatever investing in a token back when it was unregulated. But I heard somebody say not too long ago, I forgot if I read it or somebody said, I think somebody said it was at Dutch Blockchain Week a few weeks ago, is that crypto is adapting to a private equity discipline, which I think couldn't be more true. I mean, especially after having this whole regulatory framework of the MiCA being implied since July 1st, but also investors. What I see in investors, particularly sophisticated or boutique and traditional VCs, is that they're making fewer but more concentrated bets. And they're looking for solid companies who are actually building businesses, not that they're going to deploy a small ticket size. So they're actually cutting out larger tickets, but like making fewer bets. So Jacob is right. There's a lot less capital being deployed, but when they deploy, they actually deploy with a sort of a legacy mindset that once they invest, it's going to be for the long term, and how can they do the future rounds as well, and then also focus on earnouts, whether it's through liquidity events, whether it's through dividend payouts, if they're doing a straight equity investment, or if you're releasing a token, how is that liquidity then going to play out? So even though that it is tough times in terms of raising capital, even though it's a little bit harder within our industry, there are still investors out there looking for legacy investments. So if you're being transparent, if you're being honest, if you're being straightforward, and you're actually building something of value, and you've proved that you're building it, and you're not sort of like, I have this incredible idea, I just need X amount of millions of euros, and then I can, moonshot this. That's just not going to work. Like, prove your traction, have a solid product market fit, which has also always been the narrative. But like this time, you really need to prove it prior to actually raising the capital, and then be prepared to raise a bigger round, because that's what's going to be needed in order to really dominate the space. We had 4,000 whatever WASP in all of Europe, and we have 200 plus left. Out of those, 25% are banks, some are institutional, and very few of those are actually looking for capital. And the ones that's looking for capital is most likely on VCs and investors' radar. And then if you get on their radar and you reach out to them, they say they've heard about you, or vice versa, they reach out to you, then you better be able to prove that you're building something solid and for the long term, and not that, we need capital, else we're dead.
Okay, so solid long term. I think that we also see that in the data a little bit reflected in terms of the bigger rounds. The Series A and B still attracting quite a bit of capital these days, as long as they showcase traction and the likes. Now that brings us, of course, to someone who is building really something big as well, all the way from Australia. Drew, do you have any thoughts here in terms of what you are observing, maybe in your own fundraising strategy, or maybe if you happen to be an investor as well in some form, shape, or capacity? What would you add here?
Well, I hope the video still isn't lagging, but Hassan brings up some interesting points about having to show real traction now. You used to get away with an idea. You actually have to show real traction to get to get real investment. Having said that, the world is switching into a digital assets framework, and people are getting their heads around tokenization. The Nasdaq's going to tokenize, New York Stock Exchange is going to tokenize. So there's a tailwind to get that traction. But I think anybody who's starting up in this space has to show real ideas with real footprint, as opposed to, hey, I've got a great idea. And so I think Hassan touched on that. That if you want to raise money now, it can't be, I've got an idea. It has to be, here is what I'm building. Here is the people who are going to come along with me on the ride. I've got this guy, this person, this company. This is exactly what we're doing. That will get you the transaction. And listen, I'm running around now with my cap out for the stablecoin business in the Oceania region. And it's interesting at the moment what the stories that we have to take through to investors that are getting us traction. And it's got to be real users, real TAM. What is your what are you going after, and when are you going to deliver it? And that has to be very, very clear now. It can't be just an idea. It's going to be, I'm going to do this in this time frame, and this is how I'm going to do it. Execution is everything now.
Fantastic. So if execution is so important, right, and showcasing that what you're building has real product market fit, right, can generate great returns and the likes. Now, based upon your experience, I would be quite curious to ask all of you, and feel free to jump in if you feel to answer this question. Like, if you have heard, let's say, lots of pitches, right? And you guys obviously all speak very well, and you pitch, and you have lots of experience with this. Maybe for smaller or first-time founders, smaller projects out there, what is something that you see that founders maybe do wrong in their pitches or in their fundraising processes, either right now or repeatedly, like something that comes back over and over and over again? Not to say that everyone makes constant mistakes, but just so that we can take away something. Also, I can always learn, right? Things can always be better. I would love to ask you, whoever. Yes, Hassan, you're already right there.
Yeah. So one thing when we're in the early stages, and I guess you kind of have to do that. You really do need to reach out to everybody, really make yourself present. But there is a fine line in terms of like not being like completely overly sort of like exposed. But I do see, and I've made that mistake myself in the early days, that you have a tendency to just really reach out to everybody. You might go on a crowd equity platform even just to raise capital really, really quickly. But that's just, I don't think that works anymore. Unless you're working with a capital introducer or a intermediary who has a large network, have a signed agreement with them and let them reach out to their network if they actually do have a network. But I would probably avoid just, blindly and reaching out to people on LinkedIn. I get a deal flow too, and I'm not even presented as an investor. I'm not an investor. I'm invested in penning. But I still get a deal flow for no other reason than, well, maybe this guy has money. So I would totally avoid that because it just doesn't look exclusive. It doesn't look serious. Investors still wants, the hidden gems. And then if you can just like sort of like really network your way into being coming in front of a serious investor and then being sort of like an epiphany to them. It's like, oh, I can't believe that this came on my table out of everybody else, even though you've been speaking to every other investor that there exists. They get a better sense that, okay, I want to develop a relationship with this person. I want to know more and then get closer and closer. So yeah, I would totally avoid that. And also, I mean, just be transparent. Stop lying, because investors are going to find out. They're going to look into your data room and, by the way, get a data room. And then see that you're basically bullshitting. So don't do that. Obviously, if you're like super early, you don't have much traction, you don't have much data to show. That's different. But just be completely honest, because eventually the investor's gonna like pick that up, and then you just ruin your whole you've wasted your time and the investor's time, basically. But I actually had a comment in terms of like before when you touched upon AI, that a lot of capital is going to AI. That's true. I would say it is slowing down a little bit because there was the whole AI hype of in 23, 24, where a lot of, I think it was 70, 80% of all the capital from VCs was getting deployed into AI. And that's just how it is. There's always these cycles of theme investing from VCs and investors. Whoops. But I would say that today AI is becoming a enabler, and it should be a part. So back in this, going from 0 to 1 would take 12 to 18 months, right? That's when you would get serious traction. That's when you would really be able to demonstrate that, okay, I've made it. I have a product market fit. I'm sustainable, and I'm worthy of actually raising capital, where an investor can have sort of like risk assess and say that, okay, I deploy X amount of hundred thousands or millions into this company, there is a high probability that they'll make it to the next stage. Today, with the power of AI, 0 to 1 can take 6 to 12 months, if not quicker. So you should have AI as part. You don't need to be AI native, but just have AI as part of your entire narrative and your pitch. How are you going to use that as your growth stack, and how are you going to use that as an enabler to really scale?
Good points. Alex, if I want to hear if anyone is pitching to me, why are they different? What is their differentiator? I think that is most, because there's a lot of stuff going on in the world. Why are you different to anybody else in your space? So I think that is key for any startup. What's your special sauce?
Yes, that makes sense. That makes total sense. Gentlemen, feel free to keep talking. I'm just checking out some stuff on LinkedIn in the background.
I think I would like to add something here, right? Like, so I said that it wasn't a specific vertical doing fundraising, right? But I mean, if we look at it, it is, of course, our art, right? And I think the most important part, just like as you're getting customers, like there was this whole thing, you need to kiss a lot of frogs, or you just need to do a lot of research. Like if you're trying to solve something very specific, let's say you're going into a regulated market with market, right? Like there's only specific investors that's going to invest in financial companies, right? Already there, you know a little bit better what kind of investors you're looking into. Then you probably have a plan on what market you want to go into. You probably got an idea, is this going to be a standalone company, or do you see some partnership? I really think this whole thing of preparing and really understand what kind of investors you want to have, it's crucial, because there's so many, like, you're getting spammed all the time. You can spam on LinkedIn, you get spammed on Telegram. It's extremely hard to figure things out. So I think really just try to define what kind of investor do you want to have? Like, why do you need it? What is the profile? And I think as well, like, it goes the other way around. I'm quite vocal about what companies that I want to be part of. Like, I know what I'm good at. I know I used to be a CFO. I know I used to raise capital. I know how to run a financial department. And then I have a network now, right? Like that's what I'm good at, right? So it's a both and. It's really figuring out what kind of VC do you actually should target, how do you get access for them, and then as well understand what VC and investor you actually want to have. Because for me, if you take a step back, if it's the right startup and it's the right investor, they want to meet, right? Like investors want to meet with the right startup that's fitting their investment thesis, right? So I think you just need to be extremely clear. What are you trying to achieve? What kind of investor do you want to have? And like just really do it extremely focused. And I think that's something that I really messed up the first 10, 15 years, was I was just reaching out to everyone instead of sitting down and really thinking about it. And then the second one is, it's a long-term thing. Like right now, I'm not active part of a fund, but one day I actually want to do a fund here in the Nordic. I'm already talking about it out loud and saying, hey, I actually want to do something. So again, I think it's like being extremely targeted on who you actually want to have as investor, and then really try to talk aloud about it. I think that's it sounds simple, but I think that's one of the most overseen approaches out there. Because remember, it's for me, when I was leading out due diligence, for me, then I met a founder, and then maybe 3 months after I met a founder, I met him again, and then maybe I met the person like with 3 or 4 different times. For me, it's different dots, right? That's creating some kind of trajectory. So again, this whole thing of just like under promise, over deliver, and then continuously getting back. If you know the investors you want to reach, like just keep them updated every second month. I think it's being a lot more focused and a lot more aware of what smart money actually is.
Well, thank you all. I really appreciate that. I think that we actually have a couple of questions slowly coming in, which is fantastic. They also tap into some of the questions that I actually thought about to consider and to speak. For whoever's watching right now, I just want you to all know that we're aware that we have a small misconfiguration with the software that we're using here. So we are live, but not everyone who registered actually, for some reason, sees this. We're figuring that out in the background. Now, luckily, it's being recorded and some of you are attending, but if you see this live, great that you're here. If you see this later, sorry that there's an issue. Now, coming to the point then, Maria is basically saying, Hassan, could you give some examples of AI being part of the narrative of a digital assets company? And then she has also additional questions for Drew. But Hassan, AI. Talk to us about AI.
Yeah, absolutely. I mean, I wouldn't go too deep into it. So we're Penning is a infrastructure play, right? We do broker service, OTC desk, retail investment product. We basically want to become the future digital investment bank of Europe. I wanted to say globally, but let's start off with Europe. So AI is part of our growth stack, right? That's how we sort of can demonstrate this is how we're going to scale. This is how we're going to automate. This is how we're going to be more bottom line focus instead of top line, meaning we're going to like really decrease our burn. So that's how, I wouldn't call it, so suppose it was us and we're incorporating Penning, I wouldn't say that Penning is the AI powered digital investment bank of the future. It should just be part of your, at least for us, should be part of your growth stack. I think investors, like, that's just my intuition, that investors have seen enough .ai backed by AI, powered by AI. That's just, you're not going to be AI native anymore. That cycle has sort of like passed. AI is what blockchain should is today as well, I would say, almost. It's just part of your growth stack, and it's part of your tech stack. How are you going to use it and enable it for really going from 0 to 1 quicker than you would have without AI?
That makes sense. And then, thank you for that. Drew, a question to you, actually, from Maria also coming in. You mentioned that startups need to prove traction, of course, and growth. Let's say if you are a digital assets company, according to you, what would be good traction? What makes you attractive to investors? What year-over-year growth or numbers or whatever, like anything you can share from that regard? What makes traction?
Sure, and it's not year over year, it's month on month, right? So everything is real time now, and it's like, how can you show growth, number of users, whether it's volume? There's so many little things, but you can't have nothing. You have to say, okay, I've got more users. Interestingly, I can't remember whether Hassan or Jakob touched on this earlier. Real numbers are coming back into the thing. You can't say I've got no revenue, I've just got a ton of expenses and an idea. You've actually got to show traction, say, where is the revenue actually going to come from? How is the user? It can be volume, it can be revenue, it's got to be something. And you've got to show who are the use cases, how many users have I got, what is the growth of that user base, how am I going to get more users? So whether it's even just an MOU with somebody that's got a pile of users and you can attach into that, it can't be nothing anymore. It can't be an idea. So you've got to show real, I'm partnering with this guy, or I've got this piece of kit that allows people to use it. But you have to show access to real users and why you're different from whatever else is going on. I think that's very clear now.
Yeah, that makes total sense, obviously. But then I would say, let's say that you're slightly earlier in your journey and maybe you need money in order to build and to show a little bit more traction. The question is also, if you are a bit more in the start, like how do you reach those people, right? And how do you reach investors? It's kind of like the chicken and egg type of situation here, specifically in this market where funding is becoming more scarce. So that brings me maybe to another question. That would be, what would be your tip for reaching out to investors? Already mentioned before, don't like spray all over the place and just hope someone replies. Maybe yes, so if you think that is true. Like, what is like your golden tip?
Well, look, so So we're trying to do, in reality, we're not inventing a wheel. We're doing a stable coin in Australia, New Zealand, Oceania, Pacific Islands, right? So the easy analog is, well, Circle have done this and Tether have done this, right? So they've got traction, and a lot of US dollar people, US dollar companies, whether it's PayPal with PUSD, there's a whole lot of people trying to do the same thing in dollars, right? So we've got to articulate in Australia and New Zealand, Oceania, why we can replicate what they've done as the same percentage of M2. So you sit there and say they've got 300 billion out of 2.3 trillion, 23 trillion of US dollar M2. Australia and New Zealand have 2.8 trillion, so it's less than 10%. It's about 10%. But how do we articulate the same solution for users? So you've got to tell that story, even with no adoption, and then articulate how we are going to adopt in our ecosphere down here. So you've got to tell a story. Everybody who's raising money has to be a storyteller, right? That's a given. If you can't tell a good story, no one's going to give you any money.
Yeah. I'd like to add something here. I think like it's great points, but I really want to go back to my initial point was saying, like, with AI and what you can do right now, again, sit down and figure out where are you a pre-seed, seed, like define your stage. And there's obviously, because the names are so well known, you can find investors that's doing pre-seed, right? So is it just an idea you're in an early stage? There is a lot of VCs. There's a lot of incubators. There's a lot of accelerators. Like, you just need to define what kind of investors are you actually looking for. And then again, with AI, it's extremely simple. You can get the email list. You can get all these different things. You can learn about them. You can say, hey, this is my pitch. Why would this suit in this X investors portfolio, right? Like, I'm just saying it's sometimes I think we overcomplicate things. It's back to Drew's point, like data need to be verified, right? Like, now you can verify data extremely fast. So you need to, of course, to verify, you need to be good to present it. But at the end of the day, like, if you know what stage you're in, you know what market you're targeting, you know all these different things, you can find investors. Then, of course, the question is, how do you get access to the investors? Yeah, and maybe the info email doesn't work, but hey, have a look at the homepage. You can see the team members. Okay, try to write them. Okay, if they're not replying, are you connected with anyone? So I think everything that's said makes a ton of sense. I just think in this world where information is so easy to get, and the hardest part is actually getting some transparency within it, define what stage you're in, define what you want to do. I think Drew's pitch was perfect. Like, we're doing a stable coin in Australia. This is the target. This is the investor date. Like, it's extremely clear. And that's, of course, because you experience, right? But just figure out what you're trying to do, what kind of investors are you looking for, find a way into them. And then it unfortunately takes time, but it's not that complicated again. It's a hard task, but the approach is not that complicated.
Anyone cares to disagree, perhaps? Or yeah, feel free, Hassan.
Yeah, I don't disagree. I just wanted to add, and it might be a little bit controversial, and Jacob or Drew might disagree with this, but I wouldn't be opposed to using capital introducers, meaning intermediaries.
Sure,
They have, some of them have really, really strong networks. Obviously, stay away from the ones who ask for a ton of money upfront and a lot of money as a retainer fee without having any references or being able to demonstrate anything. I wouldn't be. I mean, I think they're actually in the audience. We use capital introducers. They have a really tight network. They could be lawyers. They could be corporate finance houses who just have access to capital and people which you would never be able to get access to. And I would say nothing beats a warm introduction. When a case is introduced pre-vetted through somebody to a potential investor, they tend to just look a little bit extra hard at it than if you reach out cold. But yeah, for sure. I mean, you can still do the targeted reach out, use AI, figure out which investors are looking at what stage and in what vertical. And I would also agree with Drew, and that's what we do as well. I mean, we have a great story, I would say. But a story really, really sells. Like it builds a relationship, and it sort of like draws the investor closer into your world and making them part of your journey.
I would say, can I just quick
Of
add?
course.
100%, Hassan. If you're going to engage someone, success fee only. Don't get suckered into paying up front.
No, absolutely not. And there's nothing wrong with success fee. There's a cost of capital, and that's just how it is.
100%. And everybody, if someone lands you some money, you want to tip them, right?
Mhm.
So success fee is awesome.
You pay for Google, right? Like, again, that's why
Exactly.
fundraising is the same as operating a business. It
Right.
should be the same part of it. And I really just, if it came out wrong, it's not easy to raise capital. Like it's really not easy. I just really just want to advocate of, if you build it in as part of your way you're operating, the way you're thinking, then you're going to do it 24/7, because you need to raise capital 24/7. Like, because you don't know if you need around a half year or 1 year down the road, right? So really understanding what stage are you in, what kind of investors is interesting. Think about the next step, so you already start building relationship with them. I'm definitely not saying it's easy, but I'm just saying I've just read too many things, and just like there's so many different advices, and it became a category how you can advise and actually earn money on advising startup and how to get capital. Words, I mean, I understand it's fair, but as a founder, you need to understand how you're getting customers, right? Like, that's what you should be really good at. You obviously need, if you're in a tech stage and you're in a growth stage, you need to understand that for investors as well. So it's a discipline and a DNA. And I really just want to advocate on that. Here's introducers, I love it, but really think about what kind of investors do you actually want to have. Find them, create a relationship with them. It's just because it's going to be something you're going to do for the rest of your life if you're running a tech startup. I have been CFO of a larger company where everything did well, and then something came in and we needed capital, like a profitable, like you never know when you're in the tech space if you need capital, right? So I really just want to advocate on that, like really understand what kind of investors, what stage you're in, build a relationship, make sure you're ready for the next stage, just to really get that message clear ahead.
That's quite interesting, actually. Now, really briefly, how much would a success fee be? Does that depend only on the situation and like the context? Is 5%, 3%, 15%? Like, how much is too much?
Set the number. Then negotiate from there.
It depends on size, which would be the right answer, right? Like if it's a large size, then it's a lot lower, right? If you're raising 100K, then 2%, who would do it, right? So I think it's, and as always, as with everything else in life, if you're late, and this is I know it from I've gone bankruptcy as well with a company or two. So I understand, like, you're always raising capital too late, right? And that means as well, if you're going out to brokers, the fee is going to be higher. So again, the earlier you are, the better prepared, the lower price you get. And I agree with the fingers that they put up. But again, if it's a small amount and you only have a month left, then you're not in a position to negotiate.
Right.
Absolutely. For sure. I mean, so just to add to that, I've been pitched a lot of numbers as high as 25%, and this is crazy. It doesn't matter how small or big your number is. That's a quarter of the investment that's just gonna like disappear. So there is too high. But then also, like Jacob said, if you're really too late in investing and you really need capital and somebody has direct access to it, they're also going to ask a premium. And so it's up to you if you want to pay it. If they're going to say 8%, I can close it in 1 week. I have the investor, he's ready or she's ready. It's up to you to decide.
A lot of people would take that, right?
A lot of people would take, 100%. I'll take it.
Fantastic.
Well, actually, no, I wouldn't. Don't let this be a price point for anybody, a capital introducing.
But I think it's leading back to, like, if it's not part of your day-to-day operation raising capital, then it have a real cost. Like I've spent so much time on due diligence and raising capital. Like I've done like a 3-month due diligence where I, as a head of finance / CFO, and my core team wasn't part of the day-to-day operation. So it have a real cost. And that's why I'm really just advocating everyone to basically just think about fundraising as something you're doing all the time. And this is, of course, impossible if you're a first-time founder. I really understand I've been there as well. Then it's a different game. And then it's more really try to target, figure out, and maybe pay, I wouldn't say 25%, but just if you have someone who have been in the game for some time, put it into a DNA. Talk about your problem, talk about your solution, like really just try to be vocal of the things that you're trying to change, because that would attract the right people and the right investors.
That makes total sense. I think, let me also say, Throat Labs is fundraising. We do our best always. We're a Dutch company incorporated in the Netherlands, raising an very extended pre-seed round. We're epic. We're going to make it. So if anyone is interested, make sure to contact us if you see this. If not, wait for my message. I'll find you. Right. Said that, let's talk for a second about the role of AI, right? AI is a hot topic already for many years. It's out there. I studied it before joining the Web3 space, decided then to prefer working in crypto. Long story short, it's not attracting, of course, as we all know, lots of capital right now. It's very hot, right? Alongside other types of verticals such as stablecoins, prediction markets, some infrastructure out there. It's attracting a lot worldwide. It's more and more being used as well. Like, how do you see that investors are actually incorporating AI maybe in their due diligence processes or elsewhere? Anything that we should know about as founders, you think about the role of AI? And if not, if you don't have any, AI tools that you use that we should know about, maybe how can we compete as a non-AI company with AI sucking up all the money? Any thoughts that you want to share?
Maybe just two comments. Like, I had a really good due diligence team, and I'm really happy that I had my team members, right? But what they did was data sourcing, right? Like, they basically just figuring out data, and then I had set up preliminary due diligence, and then they were filling out these things out that can now be done with AI, right? So I think leading back to Drew's point, that's why you want qualified information when you talk to the startup, right? So remember, only give verifiable data. And again, if you don't have any revenue, then it's like, how many people are you talking to? Like, it doesn't matter what it is, just give some really valid data. Just remember, VCs and business angels can now validate data extremely fast. That's number one. And I really want to advocate for this whole blockchain, which I love, and digital asset and AI. Remember, this is an enabler to solve a solution. Like, I really, really, really want to advocate when someone start having AI as the main thing. I'm just not looking at it. Like, I couldn't care less, because then they're selling a technology, right? I want a problem that someone is solving, which is making a difference, right? Like, so really just please, it's just a technology enabler, right? Like, really try to focus on the problem and your solution. And then you can say later on, like, yeah, I'm leveraging AI to do X, Y, Z. So I'm right now in Nordic Blockchain Association. I'm leveraging AI a lot. Like, I can get so much information right now. It's a power tool, but I'm not pitching, hey, I do AI. Like, we're solving education, we're solving regulatory issues, we're solving community, like, we're solving real things. We're just leveraging AI. So I really just want to advocate. Remember, give verifiable data. And don't use AI, like, it's an enabler. It's not the solution for the problem.
Yeah.
Yes, makes sense. Please go ahead.
Yeah, I was just like, in extension, that's what I said in the beginning as well. So I 100% agree with Jacob that it should be part of your growth stack. How are you going to get from zero to one quick as possible? Whereas before, 0 to 1 would take 12, 18 months. How are you going to get quicker? That's it. Unless you're an actual native AI company, that's a different. That I don't have any expertise in that. But it should just be part of your growth stack. That's it. Because investors like Jacob, and then that's also, like I said, that's my intuition as well. Like, if somebody pitches an AI company, you're not going to look at it, because it's just like you have a few dominant players. That's it. Especially, I would say in the Web3 post Mika digital asset space, so to speak, it should just be an enabler. How are you going to be an AI? I don't know, a trading bot, which also requires a license to operate in Europe. So it should really just be a growth stack, which is great to have the data and really demonstrate. And we use AI a lot, and it is part of our growth stack. So
it's lowering costs, like, eventually, right?
Yeah.
That's
And so it's giving potential investors more access to information. So, as Hassan, I think you said, there's no BS anymore. Someone will find you out, because AI can go through 1 million sources of information to find out anything about what you're doing. So you just, if you're pitching to an investor, you've got to be 100% transparent, 100% honest, because all the investors will use AI to fact check everything you've ever said, and so there's no BS anymore.
Yeah, which is beautiful.
It is beautiful.
That makes sense. Yes, I agree. I would actually throw in maybe a little bit of a contrarian potential opinion here as well. Like, obviously, AI ultimately it's code. It's oftentimes large language models that are, gathering information based on whatever data is already out there, what is established, what is coded, used usually by men. That brings me actually to a topic that I wanted to bring up, not necessarily, but only if. Obviously, I'm a female founder. We have lots of female founders in our network. If we look at the data, also here, hard data, right? We see that typically female founders raise a lot less capital than men do. Now, obviously, we are in absolute numbers in less. But I was wondering if you gentlemen have any thoughts on that. Like, any tips for female founders? Do you think that this is potentially a challenge or an inefficiency? Or I know that maybe some of you have thoughts about that. Also, some of you might or might not have been in one way or the other, invested in me in Intro Labs. So I would love to potentially hear from you, Hassan. I already see you.
Yeah, I don't have many opinions on that. I mean, other than so I don't have any data, and I haven't invested in it because I'm not really sure if investors actually look at a female founder and go, "I don't want to invest in you because you're a woman." Mm-hmm. AI is the tech vertical which has created the most new female billionaires, actually more than men. So you could, it's like, should every female then now become AI founders because that's where most billionaires are and that's where you can raise the most capital. So yeah, that's just my honest opinion. I don't have any data on that. Yes, male founders outnumbers female founders, but if it's discriminatory, I'm not really sure. I mean, it could be. I have heard stories, and and I know from my female founder friends that they do face a lot more challenges, so to speak, and they have to face a lot of adversity than men do. It could be harassment, it could be wasting their time just to be around them, to be honest. When men say no to men, they just say no, but it takes maybe a little longer for male investors to say no to a female for whatever reason. So there is that, which needs to be addressed and taken care of immediately. But whether or not female founders get less capital because they're female, I'm not sure.
Alex, you should get more. You should get more because statistically, female founders, from the measurements that I've done, are likely to be more successful. So, as Hassan points out, AI should direct more capital to female startups than female founded startups, because statistically they are more likely to be successful. So AI should be your friend in that aspect.
Maybe to add a comment here. So just to make it very clear, the last 10 years I had female co-founders. And if we take the board in NBA, it's 50%, right? My personal opinion here, and it's extremely personal, when I started out 20 years ago, the people, like the group of guys that started out, that was because we couldn't get a job. So I think it is really important to remember the legacy of startup, at least in Northern Europe. It was often people who couldn't find a job that then became entrepreneurs. So if you combine that with that investors like to invest in second or third time founders, there's of course something where it becomes a little bit hard. So I just really, in my point of view, there's some legacy of, at least in the Nordic, the tech space was just males. And if you look at the success rate, that was extremely bad. So I think there's this whole historical thing where it's primarily men who did it and they failed quite badly. But if you look at it, I think that's back to Hassan's point, and this is my personal thesis as well, is that female are often more, they take better decisions, to be honest. I actually prefer having, I actually proactively looking, not because I want to be generic on it, but we have seen better results. So I think the data shows right now that females are actually more successful. But if you look from a total, how much they actually raise, they raise less because there are less females out there. So I think there's this whole history of that, at least in the Nordic, it was primarily male founders. a lot of, I would say, stupid VCs still thinks like second, third VC, founders are the best one. So I think this is going to change, and it's going to change within the next couple of years, and it's not going to be good for for the one that's gonna run the game of saying, yeah, I'm a second, third, fourth time founder, because that doesn't really mean anything that much anymore. So I think things are going to change drastically in the numbers within the next 2 to 3 years.
Please.
Yeah, and then, I just want to I just want to add to that. So in terms of like, I don't know if you ask for advice, like how can female founders get more capital? I would say seek out to all the investment circles that are out there, and don't think about them being male or female investors. Just get out there. For capital doesn't care about gender. So just go out there, be you, and then just do the best like as you can, and go get that money. And then that's essentially what everybody cares about in the investment game, right? Obviously, the bigger mission that you're solving something here is you're creating something meaningful, you're creating jobs, all that stuff, and operating on an ethical rails. But in the end, it's raising capital, and then you can worry about everything else after. So get out in those circles, in all the circles. It doesn't matter if it's if it's male dominant. Get out there.
Yeah, the statistics are on your side.
Yeah, that's it. That's your strongest assets. Like, oh well, the likelihood for us to succeed is way higher than men, because there's been so many male founders who've really, really miserably failed. Then the statistics are really on your side. So play that for sure.
But just laugh. Like if you got a no as a female, just go back and give them the middle finger when you succeed. I think, and then that's a good one. Because I think it's again, I haven't experienced, because due to my sex, but I don't see that as like the VCs and the people that I know, they couldn't care less, right? They're only looking about the best founders, and they are seeing trades where the second, third, let's call lifestyle entrepreneurs, like that's over. Like that used to be a thing. If you've been an entrepreneur the whole life, then it was easier to raise capital. That game is actually changing now. Yeah. You rather want to have a dropout from a larger corporation, right? You actually want to have someone who will work somewhere for 10, 15 years and do their stuff. So I think things are changing, and it's easy for me to say, but I really see that things are changing as they should.
No, I agree actually, totally. I mean, it always depends, right? On the circumstances, who you are as a person, what you're building as a company. Everyone, let's be honest, faces some boundaries or challenges in one way or the other. Maybe it's because you're female. Maybe it's because you live in a part of the world that is slightly less well connected. Maybe it's because you're a first-time founder. Maybe you're not a great public speaker and you don't know how to sell. Can also be a problem, right? There's all sorts of challenges that everyone faces. But most definitely, most female founders that I come across, and I also have a few stories. They do notice things from time to time. But hey, we all notice things, and it's about finding the right match, right? If you find an investor that doesn't want to invest implicitly or explicitly because maybe you're a founder, maybe they're looking for something else instead of your company, then so be it, right? Next, I would say there's opportunity everywhere. We just have to find the right people. Now that maybe brings me to basically the last question, because we're talking and there's lots of other things to do, including work and actually build things, right? And instead of only talking, although this conversation was naturally fantastic and very, very interesting, what I would love to ask you all, like you have very much, let's say, Hassan and Jacob, the Nordics perspective, whilst Drew, you have been building out of Australia. Like, I would be kind of like, as a cultural relativist, I'm always very curious about how maybe the space is characterized in your region. What we see is that most of the American startups are the ones that are raising capital right now. Like, how is the investment climate where you're based, as far as you know? And yes, do you have anything useful to share maybe about that? Maybe even a tip based upon what works great in your region. Please go ahead.
Yeah, so I'm talking purely from our industry, and I'm talking as a MiCA licensed company, and also post 1st July when the deadline sort of like crossed. There's, like I said, there's only a handful comparably, because there was thousands of crypto companies before, and now we have a couple of hundreds plus minus left today. And out of those are 25% are banks and institutionals, and very few of them are actually raising capital, right? So the deal flow in our sort of industry is very, very, very tight and small. But that also means that if you're doing it right and you're doing it well, then you have a golden opportunity to be on investors' radar. So what we're seeing is that okay, local investors are looking for maybe a different. So here in Nordics, they have a tendency to deploy less capital unless you are like in a new theme, which is AI. But if you sort of like, so again, in our industry, in our space, and us as a micro licensed company only, we start to look for capital outside of Nordics, because you have capital that wants to be deployed in regions where their portfolio companies are not covering. So we're looking at south of Europe, we're looking at Baltics, we're looking at Spain even, and the Balkans as well, yeah, because they've invested in portfolio companies which are sort of like covering that region, but they want to invest their capital into same type of sort of like vertical, which is covering a different region. So just go outside your borders. We're not like looking in the Nordics that much, to be honest, when it comes to fundraising. Yeah.
So looking elsewhere, how is it then in Australia, Drew? Tell us about Australia.
One of the things that I guess people underestimate a little bit is government policy. And one of the things we've been trying to do is lobby more so as we're shifting from, I guess, an analog into where is Web3, where are the incentives? If you get the right policies from a government level to encourage innovation, tax breaks for startups, things like that, they can allow capital inflow if there's encouragement for investors, and whether that's R&D reductions or tax breaks for research and development. I think that's something that we've seen a couple of changes that the Australian government made that had a negative consequence for any startup. And so we're lobbying now with our policymakers, and it was an unintended consequence. It was like, here's a tax rule to change this, but it flipped into particularly startups that they didn't realize. So that's one of the things that I would make people aware of, that don't be passive around lobbying policymakers. If you have an opportunity to lobby policymakers, you can create a constructive environment for startups. And if you leave things just happen, you can end up with a destructive, is probably the wrong word, but a less constructive environment for startups. So don't underestimate talking to policymakers as opposed to just doing your startup thing. You need an environment that encourages. So there's generally, in whatever country or regime, there's generally a fintech or a Web3 or a blockchain association. Work with those groups, and how do you lobby government to create a constructive environment?
Right. So we have to go lobbying as well. Fantastic.
Yeah. You've got to lobby. You've got to tell a story. You've got to lobby.
Nice.
Blockchain.
Nice.
Jacob, this is your space. Blockchain association, right?
Yeah, but I think it's a valid point. It's again going in and saying you're engaged in the problem that you're trying to solve, right? So I really advocate for it. And I think maybe taking time into consideration, I think we only have a minute left. It's always easy for people like me sitting here and giving advice. And when I was younger, I always hated listening to people like myself right now. So if anyone have any questions or anything, feel free to reach out to me. Like, fundraising is complex. It's not like we can give some generic answers, but everything is tailored to you. So if anyone are raising capital in the Nordic or in Europe, ping me on LinkedIn. I'm happy to chat and see if I can give you advice or two.
Yeah, I'll second that.
That's great. Anything you wanted to add, or are you good?
No, I think I really just want to. I think Hassan and Drew said all the smart things, right? So again, I just really want to advocate for, like, if you really understand the problem and that you're trying to solve, right, and you really understand your stage, then it becomes a lot easier for you to identify who you actually need to talk to. And it's an ongoing journey. So I really just wanted to advocate it, really spend time on understanding, like, what are you trying to solve? What is your solution? What stage are you in? Like, just like a BD strategy, really just think about fundraising like that. And please let it be a DNA within your company, because you're going to raise capital for the rest of your life. And when you're done raising capital, then you're going to exit, right? Then you're going to spend time on actually trying to sell your shares. So again, like, this whole thing of raising then becomes exiting, right? So I think it's just, remember, it is just a core part of what you do.
Wow, what a fantastic bridge, or I mean, not a bridging round, an exit towards an exit. Fantastic. Well done. That actually maybe brings us to a potential next session. But for now, I want to thank you, all of you tuning in from all over the world. Drew, Hassan, Jacob, thank you all so much. If anyone wants to get in touch with you, of course, they can do so. We have had some misconfigurations with LinkedIn, something that is beyond our control. But what we are going to do is actually also send this video as well as excerpts of this video to everyone who has signed up. We're going to share all your wisdom across multiple channels. And we want to really thank you for all your time. And anyone who's watching this, thank you for your time. Probably later. And have a great summer. It's been really warm in here, basically 30 degrees. Hence the ventilator. Definitely a great fundraising in 2026 hot summer edition. And thank you for all your hot takes as well as your time, sincerely. What else we have in this life? Thank you all, gentlemen, and see you soon. And don't forget to potentially invest in Throat Labs. If you're watching this, contact me. But don't forget to do your due diligence with AI as well, of course. Thank you all so much and have a great summer. I'm going to end the stream. Cheers, everyone.
Thank you very much.
Thank you.
Thanks, Alex.
Bye.
Thanks, guys.